E-mini playbook, November the 6th, 2023, 7-minute recap. Let's get into the playbook for today. We will start where we always start, asking the question, what is the market mood of the day? We are coming off of several downtrends, going into congestion, downtrend, going into congestion, and a downtrend that began October 17th, 18th, and continued all the way up until last week, where we had October 30th and we had this uh, uptrend. Now, the interesting thing about this uptrend is that as we go over in the playbook, each market has its own unique personality, its quirks, and its behaviors. It is not characteristic of the E-mini S&P to go directly from a downward trend immediately into an upward trend. That is a 2 in 10 chance that that would happen. We usually would go from a downward trend into what we saw here, congestion. We go into a downward trend, we go into congestion, giving the market time to respond to whether or not it is actually going to continue with the downtrend or if it's going to reverse. The unique situation that we are observing here is that this downtrend immediately turns into an uptrend. So that is the market that we find ourselves in. If it happens that quick, it is tricky to navigate, but it also gives us an opportunity to pay attention to the internal tools that we use to determine what's happening throughout the day. Observing that, we look into today's intraday session and we ask the question of whether or not this upward trend will continue. The challenge that we have is that we have this supply and demand zone, which was drawn when we reached this high back in the middle of October. It was also drawn because we had this as area that we bounced off of in August of 23rd. And we also had some activity at this zone back in June. So we're paying attention to this zone, this 4380 zone, as important. And we draw it in so that we can monitor the fact that there is heavy price activity at that point, heavy selling, heavy buying. And that's why we put our supply and demand zones there, because the question of whether or not this upward trend will continue is heavily contingent on whether or not we can break through this zone. So looking at what happened as of today, we see this bar. And I am very fond of open, high, low, close bars, especially on the daily chart, because it gives us a snapshot of what happened for that particular day. We have the left wick showing us where the market opens, the right wick showing us where the market closed. So for each bar, we are getting a day's worth of activity and we can see what occurs. We can see these 1, 2, 3, 4, 5 days. We had an open here, a close higher here, an open here, a close higher here. We have this activity continuing. So is it going to continue for today? That's the question that we're looking at. And a good way to answer a question is by asking, what does the market have the strength to do? That's a good question to ask. However, there's another question that is also important to ask, and that is, what does the market not have the strength to do? So that's what we were up against today. Does the market have the strength to break through this zone right here? And the answer to that, we have to rely on our internals. In order to break through this zone, we would need to see heavy upward activity. We would have to see the advanced decline line moving upward. We would have to see a significant number of stocks that are advancing versus declining. We would have to see high volume also. That would give us an indication of whether or not there is enough energy to break through this zone. And going into today, we are seeing those two items are absent. That volume is pretty average at this point. And when we look at the advanced decline line, we are seeing downward activity. We are starting at zero and we are trickling down for the first hour of activity. And for the rest of the day, we are lingering at negative 1,000. This is not the environment that gives us the fuel that we need to break through this zone right here. Not saying that it won't happen, but a day like today, when those attributes are not present, the market is not giving us an indication that it's going to break through that zone. And as a result, what do we get? We have technical traders that will call this bar today a hammer because the market opens at this level, has some activity, and then it closes at a similar level. What's the difference between this day and these days here? The fact that the market is bumping its head up against the supply and demand zone. Supply and demand zones are extremely important because they may negate the particular trend that we're in when the market reaches up to a particular place where there is known selling volume, where there is known buying activity. We have a zone here that was established previously that lets us know that there is buying activity at this zone, and we see the result occurring as the market bounces off of that zone. Same thing happens when the market goes up to this zone here. There is selling activity at this zone that has previously happened historically. So by monitoring these zones, we can get an idea of whether or not the bulls are continuing this upward trend. And we see today that it didn't happen. So, as traders, we are able to determine whether or not we're going to go long by looking at the internal tools that we look at to say, this market doesn't have a lot of strength to break through this zone right here. So, today's not a good day to go long to continue this upward trend. A short trade, we can take a short trade based on the fact that we are in an upward trend, but we are bumping up our heads up against a known sell zone. So that's the lean that we were on today. We had a couple of quick short trades, not looking for an extended short trade. Again, we are in an upward trend, but if we're going to go on the offensive and we're going to take what the market is giving us, the market only gave us particularly small short trades today based on those dynamics. Hope everyone was able to read that market well, going and utilizing the tools as we observe the sentiment of the E-mini and its characteristics, using our tools as our defense in order to let us know who's in control. Going into tomorrow, Tuesday, November the 7th, the question will also become whether or not we will break this zone right here. Again, a very important zone. We want to see what the internals are telling us. Does the market has the strength to break through this zone? If so, we'll continue to the upside. If not, we will cautiously observe whether or not we're going to turn and go back down, bouncing off this zone right here. Look, Looking forward to an interesting day tomorrow. Hope everyone traded well, and we look forward to seeing all traders in the trading room bright and early tomorrow. Have a wonderful evening.